for rate cuts. My next guest says no rate cuts, at least not before the election. I want to bring in Entrepreneur Shares LLC, their COO, Eva Ondos. So would this be for political reasons or just not a lack of enough data to justify it?
I won't get into the political, although I think, yes, that too. But from a statistical point of view, we've been getting CPI running at about 0.3 to 0.4% year to date. Although in October and like in the Q4 2023, we saw some 0.1 or 0.2 readings. So I think until the Fed sees consecutive 0.2 and ideally 0.1 readings, they won't feel the confidence to start cutting rates.
Right.
So we don't expect that maybe at all in 2024. We'll see.
Right. If you amateurize what we've gotten recently, then still year over year, that we're too far away from that 2% target. That's what you're suggesting.
Exactly.
So in the meantime, the only stock that's working is NVIDIA. And you say, hey, it is working because it is the stock of a lifetime. It's the growth story of a lifetime. Yep. Why do you believe so much?
It is the growth story. I don't think we'll see something like that in our lifetime. So we keep buying, and we believe that if you look at their numbers, right? So their revenue in Q1 exceeded the revenue in the whole calendar year of 2023. Their profits in the trailing 12 months have exceeded what they made in the last 30 years since inception.
Right.
This is extraordinary for a startup, let alone a $2.8 trillion company. So we won't see something like this again. It is an opportunity that people shouldn't miss.
All right, let's talk in the meantime. You are telling the investors, you're suggesting to investors to reduce their weight in high relative multiples. And as you use as a tool, total enterprise value, TEF. Mm-hmm. I'm glad you brought this up. Not a lot of folks use this. So you use this, you use forward revenue into TEV, forward cash flow, EBITDA, forward PE ratios.
Yes.
Tell us what this tells you. How does this inform you?
So that informs us. So we saw examples like Salesforce and MongoDB. Valuations got ahead of themselves year to date. And in some cases, companies are able to meet and exceed expectations like NVIDIA, but in some cases, they're not. So these statistics here show you if even in a good environment, right, when growth keeps going higher, that's fine to have an elevated forward PE ratio. But in an environment where GDP growth is coming down, we don't want to see that.
So in 1984, you're too young to remember this, there was a group called Bananarama. They had a song called Cruel Summer. I thought about it because you said we're in for a choppy summer.
Yeah.
A choppy summer. Sticky inflation, bifurcated markets, unemployment rising, big ticket purchases are being deferred. This doesn't look choppy to me. This looks a little bit more ominous than choppy.
Well, at the same time, GDP growth coming down can also be viewed as a bullish sign for some.
Well, someone earlier today said that was the sign of a soft landing.
Exactly. So there is the theory that there is a lag, and at some point that's going to be translated into a decline in inflation. But we can be patient for a couple of months, but at some point we need to see that, right? So that's why you have macroeconomic forces, mixed macroeconomic forces that have been viewed in different ways, and then you have a counterbalancing impact on the direction of the market.
Right.
So it's really a conflicted market that we have.
It is a conflicted market. So, and you have here, the bifurcated market. Here's my concern. I got less than a minute to go, and I keep saying this. I feel like we get these gradual signs of slowing, but we're going to all of a sudden fall off a cliff. I think we're going to have a series of economic data that just comes in really awful. And, of course, the Fed will rush to cut rates. But historically, it says that when the Fed cuts rates when they're being forced to cut it because of a sort of economic emergency, the stock market goes down, not up.
Well, I hope we won't say that. I want to be the optimist, but at the same time, we don't want a 90-70 scenario where GDP growth comes down, inflation remains high, right? So we need to be very careful, and we need to see. We get CPI next Wednesday, I think. So right, we need to see these numbers.
We'll get the jobs report this week. What are you looking for?
Friday. So I hope we won't. Let's see. I hope it stays at 3.9.
Right.
But if it goes to 4, that's at psychological level. We'll see how the market reacts to it.
Yeah, it'd be interesting if bad news is bad news or bad news is good news.
Exactly. Nice to see you.